Hey, I am Tiffany Thomas with WealthyTiffany.com. Welcome to day 3 of our 12 days of stocks. Super excited to be with you guys today. I wanted to share this stat with you. So did you know if you do not start saving until age 45, you will need to save 3 times as much as if you started at 25. That's crazy, 3 times as much. And here's the thing that could be lessened a little bit if you are investing in stocks. So that's what I want to talk about today. Like I said, we're on day 3 of the 12 days of stocks. Today we are going to be talking about lowering your risk with stocks. And before we dive in, tell me in the comments how many stocks you currently own. I'm curious to know if you own 0 stocks and you're looking to buy your first stock, or maybe you have a couple stocks, maybe you have 1 or 2, and you just want to become better at buying stocks. So put in the comments how many stocks you currently own. I would love to know. And even if you're watching the replay, please put it in because I'm going to go back and look at the replay and see who else has commented. So I would love to know. And stay with me for today and the next 9 days, and I will reveal the full scoop on stocks. And even though we're going to have a blast, it's going to be fun, the real reason you should be sticking around is because of all the mind-blowing information I'm going to be sharing with you about making money with stocks. I am Tiffany Thomas, and I have helped individuals like yourself go from completely confused about the stock market to confident investors. And stick with me long enough, and you may just see yourself turn into a confident investor. You're welcome. Okay, so let's dive into day 3, which is lowering your risk with stocks. And stocks are not as risky as you may think they are. I know a lot of people think they're super risky, but there's a good way to buy stocks and make money from them. So the first point that I want to talk about today is actually a savings account can actually be riskier than purchasing or investing in stocks. It's true. So keeping your money in a savings isn't even keeping up with inflation, which is super risky because that means you're losing money by just keeping it in your savings account. And I want to show you a chart so you can get a visual of this. So let me share my screen with you. Okay. So you can see in this screen right here, I have the inflation rate versus the savings rate. So if you can see that blue line, that would be the savings rate, how much you'd be making in your savings account. And then that black line is the inflation rate. And by not even keeping up with inflation, you are losing money. Do you see that? So the black line is, for the most part, ahead or above the blue line. So if you're just keeping your money in a savings account, you're really not keeping up with inflation, which means you're losing purchasing power. You're essentially losing money each year by just keeping it in your savings account, which is pretty scary. And even if your stocks, start to drop, you can take a look at why you bought them in the first place and see if they are still in line with why you bought them to begin with. And most likely, if they are, you can keep a hold of them and you'll see that stock price continue to rise over time. And if you want help in picking the right stock for you, I do have a course. It's called Buy Your First Stock in 48 Hours. And I go over step by step on how to choose your stock and actually how to purchase your stock. So it's a really awesome course and you can find it at buyyourfirststock.com. And how many of you are starting to rethink keeping your money in savings now that you've seen this chart? Give me a yes in the comments if that's true. If you're starting to think, oh, I do have a lot of money in savings and maybe I really shouldn't keep it in my savings account because I am losing money. I'm not even keeping up with that inflation rate, right? And I want to show you one other little graph here so you can get another visual. And this is just it's Apple stock. That blue line is the Apple stock. And this right here it's actually the CPI, but it's used to calculate inflation. So you can kind of see how that red line is for the most part, underneath that blue line, and the blue line is the Apple stock. So there's lots of stocks that have the same sort of trend. It's above that inflation rate. So you can see, you know, in this one, if you were to purchase Apple stock, you would be way, way above that inflation rate, which is totally what we want. So you guys share this video with others if you are finding it helpful and you think others would find it helpful as well. That would be awesome. Okay, so let's move into the second point that I have. And let me come back here to you guys. Okay. So let me move into the next point, which is creating a stock buying strategy helps you lower your risk when investing with stocks. It's a simple fact. Having a strategy makes it a lot easier to reduce your risk. And, you know, just for an example, you know, if your strategy is to pick a certain price to buy a stock at, and then you'll keep it until it reaches, you know, another price, and then you sell it. So that could be, you know, a simplified version of your strategy. You know what price you're going to get in at, and you know what price you're going to get out at. And that really helps to reduce your risk when you're investing in stocks. And, you know, I go over this strategy in my course, Buy Your First Stock in 48 Hours. So if you need help with coming up with a good stock investing strategy, definitely check out the course. And, you know, how many of you would like to put investing on autopilot? Not have to think about, you know, what you're going to do with your investments all the time and just have that strategy in place. Give me some yeses in the comment if that is you. If you kind of want to put it on autopilot, you know your strategy and that's what you follow. You're not trying to think about all different things when you're trying to buy stocks. It's more, you know, this is my strategy. This is how it's done. It's very simplified. It's, you know, more automated. So give me some yeses in the comments if you think that is a good idea. And also, you know, just in comparison to having a strategy, a stock buying strategy, maybe you have a shopping strategy that you follow. So tell me in the comments, you know, if you have kind of a shopping strategy. Maybe you buy when it's on sale. Or maybe your strategy is just because it's on sale doesn't mean you should buy it. So just comment with the word strategy if you have, you know, a shopping strategy in place. I would love to know. And let's move to the next point number 3. And this one is to lower your risk with stocks when you are aware of the 2 main elements that actually drive the stock market. And those 2 main elements are fear and greed. When you control those 2 elements, then you dramatically reduce your risk when you're investing with stocks. And what do I mean by fear and greed? So a lot of people just have a gut reaction, and it's either to, you know, have that fear overtake them or have that greed overtake them. And, you know, this especially happens with stocks. And, you know, when the stocks start to drop, they have the fear, and so they actually end up selling and losing their money. And then when the stocks are on the rise, you know, they start thinking, oh, I can make a lot of money. So they have that greed. And when that comes into play, then they purchase when it's already high. And they actually end up losing a lot of money that way too. So we actually want to have, you know, a buy low, sell high strategy. We want to ignore that fear and greed, which are the 2 main elements that actually drive the stock market. And let me show you a chart of this so you can kind of see what I'm talking about. Okay. So let me pull this up for you guys and you can see what I'm talking about. So you can see this line kind of represents the stock market. So it goes up and down, right? And you can see on the left side that when the stock price starts to rise, people get greedy and they want to buy the stocks. They buy a lot, right? And then when it starts to come down, they have that fear and they sell their stocks. And if you continue to repeat this process, you'll become broke, right? So we really don't want that. And we want to keep our risk really low and not let greed or fear take over, because those are 2 main things that drive the stock market. So we really want to be aware of the fear and greed. So we should actually be buying stocks when they are on sale. So when they are at the low point, right? We want to buy low. And this is actually, something that I do talk about in my course, Buy Your First Stock in 48 Hours. So I go over, this strategy of buying low and selling high. So we can actually lower our risk and make money from stocks. And you guys, give me a yes in the comments if you've ever acted in fear before and regretted it. Or maybe, even it was an inaction. You didn't take action because of fear and you regretted it. I know I've had, things like that happen to me, where I've acted in fear instead of, faith, if you will, and regretted it later. So we really don't want to let that fear or greed take over. And, just give me a yes in the comments, even if you're watching the replay, and let me know if I'm not alone. And, you've made a decision based off fear and regretted it later. And, I am curious to know what one of your fears is around investing. Is it losing money, losing all of your money, or just maybe part of your money, or not making as much money as you want? Or maybe you're just afraid of making a mistake. I would love to know, just what one of your fears is, so that I can address that later. And yeah, I'm just curious, is it, a lot of people are really afraid of losing all their money. But if we, follow, like I said, our stock buying strategy, then we can really reduce that risk and make money from stocks instead of lose money. Okay, so let's move to the last point number 4. And this one here, I'm going to come back to the screen so you guys can see me again. Okay, so this one is our last point, and it's lowering our risk with stocks by being flexible. So when we are investing in stocks, it means that we are not investing money that we are going to need right away. So we're not investing, our emergency fund. We are just, keeping that in our high interest savings account, and we're investing money that we are not going to need right away. So we can be flexible with it, right? And it also means, adjusting your spending in the financial freedom years. So, maybe the stock market goes down one year and we can be flexible and maybe not, take that cruise to the Caribbean that year. Maybe we can take it the next year when the stocks go back up. So just having that flexibility when investing with stocks will really reduce your risk when you're purchasing stocks. And, my course, it does help you know what to do after you've purchased your stocks. So you're not just purchasing stocks and thinking, okay, now what, right? So I go into more detail about what to do after you've purchased your stocks, which is really helpful. So you can check that out at buyyourfirststock.com. And you guys, give me a yes if you've already learned to be flexible with some parts of your life, some aspects of your life, right? Sometimes unexpected things happen and we just have to, try to plan for the worst, but hope for the best, right? But we are flexible in what we're doing. So, if something expected does come up, we're able to be flexible and adjust to that, right? And this is part of, buying stocks, investing in stocks. We just need to be a little bit flexible, and we can really make a lot of money with stocks by, implementing this flexibility. And, if you know someone that might need this information, please tag a friend, let them know about these videos, and, let them benefit from this information so they can learn more about making money with stocks. Okay, so let's do a quick recap of today. Lower your risk with stocks. So the first point that we talked about was that savings, putting your money in savings, can actually be riskier than investing in stocks. And then the second point we talked about was creating a stock buying strategy helps to lower your risk with stocks. And you can also lower your risk by being aware of the two stock market drivers, fear and greed. And then the last point we talked about was being flexible helps you lower your risk when investing in stocks. So hopefully you guys found this helpful. And if you do have more questions or want more information about buying stocks, please check out my awesome course, Buy Your First Stock in 48 Hours. You can find it at buyyourfirststock.com. And I will see you tomorrow, the same time, 11 a.m. Mountain Standard Time on my Facebook page for day 4 of the 12 days of stocks. And I will see you guys then. All right. Thank you.